Retail, you got to sell 3-4 units a week to stay on the shelf. In club, you got to sell 40-50 units a week to warrant and for them to want to keep you on the shelf. And we've done that now consistently for over 2 years. So we vetted our brand. We vetted our product lines out. We're going to take those items now and go after retail.
Hey there, Lincoln here from boacademy.org. Today I want to talk to you about the short report on Tattoo Chef Inc. If you've been watching this channel for the last few months, you will know that I am heavily invested in Tattoo Chef Inc., the frozen plant-based foods company that makes delicious plant-based foods for people who do not want to cook their own meal and want to eat healthy. So I'm very bullish on Tattoo Chef and I plan to hold the company for the long term, but that does not mean that I'm going to ignore the bad news or any bad reports that come out about the company, because again, I'm not a cult follower. If someone comes out and tells me, hey, Tattoo Chef is going down, is going to fail, I want to say, hey, give me your data. Let me check it out for myself. I'm going to look at it, understand what they're saying, and then make my own assessment, reassess my investment, and decide whether or not I'm going to hold, buy more, or sell and exit. That's what we preach on this channel. Thinking for yourself. You take in all the information, you combine them, and then you figure out what you believe to be true, and you move on and make the next choice from there. So I've done that here. When I go into short reports, what I do is go in, believe in everything. I want to believe every single line that is in the short report, because with that mindset, I'm not going to dismiss what they're saying until I have all the information and then I can assess it. So I'm going into these reports just saying, hey, this guy might know what he's talking about. Let me listen to him, see what he knows, and then once I have that information, I can say, okay, now knowing what I know and what I've heard from the company and from my interview with the CFO of Tattoo Chef a few weeks ago, what do I believe now with this new information? And from there, I can go and check if that information is correct. So I take notes and make sure that once I finish reading, I can go look for other information from other sources to either back up or disprove what the short reporter said. And of course, I'm going to weigh the credibility of the reporter, because not everyone is as credible as they would like you to believe. So in this video, we're going to walk through the points from the summary of the report, because we have enough information in the summary to figure out how to move forward. And as we walk through each one, I want to let you know what I think of it and what the company has said in their presentation, in their investor deck. And of course, if I agree with what the short report is saying, then I will tell you exactly why I agree with it and how the company can mitigate any risk that comes from that point. There are 4 points in this summary, and then the shorter goes and takes a little bit of shots at Sarah Galletti, the tattoo chef herself. So we're going to walk through that too, and I'll let you know what my thoughts are on that. But before we jump in, I want to ask you a favor. If you enjoyed the video, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on each of these points and what you are going to do with Tattoo Chef moving forward. If you plan to hold, if you plan to sell, or if you want to buy more. And of course, if you want to help the channel grow and reach more investors, then join us over at patreon.boacademy.org. You will get more access to me and get direct answers to your investing questions. And you will be able to engage in our Discord channel where we share knowledge and discuss stocks and SPACs that we're all invested in so that we can help each other grow our wealth together. And you will have a chance at winning $200 every month just for being a loyal and engaged patron. So if you're interested in all of that, join us over at patreon.boacademy.org. Now let's jump in. So the title of this short report is Tattoo Chef Inc. Cooling sales at frozen vegetable SPAC will likely leave investors burned. Clever, very cute. Okay, and the shorter is Kerrisdale Capital Management. The summary says in the first point, while Tattoo Chef revenues have grown rapidly this year, Nielsen scanner data shows that the retail sales stalled in recent months, significantly underperforming other plant-based emerging brands like Caulipower and Daiya. So, okay, cool. So he has some data from Nielsen and their scanner data that they deploy around the country in retail grocers and club stores. So he's saying here that they have some data from Sam's Club and it's showing that Tattoo Chef is underperforming in sales of their branded products. So okay, if that's true, that's bad. But the data is not credible. His data is based on Nielsen data from this one store. That doesn't tell the full story. So I do want the company to come out and release some more data about this, or at least address this point, because I don't have the full data set, neither does this short reporter. They do not have the full data set, so they are cherry picking on one data set. So I will rate this point a C. It might be correct and it might be bad, but the sampling data is not credible. They do not have enough information to make this a leading point in their short report. They are using insufficient data to scare investors. And I don't think that's ethical, but that's their job. We've covered short selling on a previous video. And if you haven't seen that, you should go watch that video so you can understand their motivations and why they do the things they do, because they want to see companies' stock go down in the short term so that they can buy back in at a shorter price than where they sold the stock for previously, so that they can return that stock to their lender and then cash in on the profits between the margin. So that's how they make money, and that's why they will release a report like this to try to scare investors, and their data will not always be sufficient to back up their claims. So this first point gets a grade of C because of insignificant data. So moving on to point 2. Point 2 says that Tattoo Chef suffers from extreme concentration risk, with 70% of branded sales coming from selling just 4 to 5 products to Sam's Club. Okay, when I first read this about 12 days ago, I thought this was the biggest point in the report, and I still think that's the case. If this is true, that is bad news, because having 70% of your sales come from one customer, one partner, is never good, because if that partner cancels on you, then you lose 70% of your sales. So this could be potentially bad for most companies, but Tattoo Chef is completely different. This company by Sam Galletti and family, including Sarah Galletti, was largely bootstrapped for years. So this family business took every opportunity that they were given to grow their brand. Their brand is 3 years old. So yes, they may be concentrated in a few stores, but that's because they had to do what they had to do to get to where they are today. And if you can build a brand from the ground up and get it to Sam's Club and then take that brand public to the public markets, you must be doing something right. So of course, about half of Tattoo Chef Inc. sales are from private labels, but that's because the company has only had 3 years to start building their brand. The brand was started back in 2017, and over the years, they've been trying to get more of their sales to be accounted for by their branded products. And if you look at their investor presentation for just a few seconds, you will see that reported in the deck. They say that over and over again. Right here on page 15, it says established branded and private label presence in leading retailers. Tattoo Chef's branded sales are expected to outpace growth of private label as the company continues to launch new products and expand into new retail doors. Since Tattoo Chef began selling plant-based products in 2017, retailers have relied on the company to provide high-quality, plant-based options in order to meet growing consumer demand for these types of foods. Tattoo Chef's growing reputation in the food industry has led to it being approached by multiple retailers that request that the company sell both its branded and private label products in their stores. That's the whole story. The company has been doing so well over the years in their private labels that when they were ready to start a brand, they already had customers lining up to say, hey, come try it out where we are. Come try it out at Sam's Club. Come try it out at Costco, Walmart. Come here and bring your frozen plant-based foods that is satisfying the growing trend for plant-based foods, for healthier eating. Come here, we want you. And they did exactly that. So yes, they have been concentrated in a few club stores, but that's because they haven't even ventured into retail yet. They've been so focused on the clubs. And now they can go out and say, hey, we've proven ourselves in clubs, which is actually harder. You have to do much better in club stores like Costco, like Sam's Club, to keep your products on the shelves. The CEO of Tattoo Chef, Sam Galletti, has just said recently that you have to sell about 20x to 10x the amount of products that you would have to sell in retail in club. So club is much harder. Now that they're going to venture into retail, they will have a much easier path forward to succeed because they've proven themselves in club. So I'm not concerned about this. Yes, if this was another company who has 70% of their sales concentrated in one store, I would run away from that. And I've said that in the past. There's a company that's going public via a SPAC that has concentrated most of their sales as a Microsoft partner. I don't want to touch that. I don't want a business that has most of their sales concentrated in one partner loving them. If that partnership falls apart, then the company also falls apart. So yes, that is a good point this short seller has made, but Tattoo Chef is different, and they have shown that they're going to have a better path forward to success than many other brands because they have a profitable company behind them.
But then in the same regard, it's like we're different in that, like most brands, they don't they don't have a company that's profitable. So we have this company that's profitable that now that we're gonna really take a look at refocusing and just going after and maximizing our brand now. We don't have to lose money. We could sit there and not even dip into this balance sheet, this beautiful balance sheet money that we got out of this SPAC. So it's another unique situation, because typically brands that are just emerging, they have to go sow in the hole, to just get on the shelf. But because of this foundation we had already from private label and branded and the business that we're doing, we were a profitable company. So now we'll be able to take this infrastructure and these dollars and go attack this market without having to go like crazy and just take risks that I don't think that we would be taking. Because people sit there and they go, oh, well, let's go try and see if this brand or these products work on the market. That's done. We already know, because in the most difficult place to be successful, 50 units a week in retail, you got to sell 3-4 units a week to stay on the shelf. In club, you got to sell 40-50 units a week to warrant and for them to want to keep you on the shelf. And we've done that now consistently for over 2 years. So we vetted our brand. We vetted our product lines out. We're going to take those items now and go after retail. And of course, there may be some similarities, but the retail unit sizes will be different. We may tweak it a little bit so it's more unique to that retailer.
So right here in the presentation on page 15, it has a graph of their expectations for how they're going to grow their branded products over the next few years. So in 2017, 93% of their sales came from private label. In 2018, 94% came from private label. In 2019 is where it drops off. The branded products start to get traction. In 2019, only 74% of the company's sales came from their private labels. That's down 20% from the year prior. That means that the branded products, the branded Tattoo Chef products, accounted for 26% of their sales in 2019. That's great. In 2020, they're projecting 52% of their sales to be from their public branded labeled products. That's money to me. That's the whole point of all of this, to make Tattoo Chef a household name, not the private labels. They're moving away from that. And Tattoo Chef is only getting started. In 2021, they're projecting $222 million in revenue. And guess what? 63% of that is going to be from the branded products, from the Tattoo Chef brand label products. And that's still going to be from mostly club sales. Costco, Sam's Clubs, and the other club stores. They're just getting into retail. Walmart, they were at 7% when the SPAC launched. They've gone into more stores. They're getting into more. They just recently got into Target. And now they're going to start to go into your local grocery stores, that's retail, and start taking up shelf space. That's going to be coming in 2022. The CEO has discussed their plan to get into retail. And then of course, the company has not been marketing. They've been a family business. They've been doing it on their own, Sam and Sarah. But now they have all this money from the Tattoo Chef plus FMCI merger, the SPAC merger, to go on and throw millions of dollars at marketing their brand. The CEO recently said that their marketing plan is going to get them 2 billion impressions, and that's going to launch in 2021. We're just getting started with all of this. So yes, the concentration may be a problem, but it's a problem of the past, and it was a good problem in the past. So I give this point a B-. It's a real problem if it's actually true, if the data is correct, which is probably not correct because Tattoo Chef has come out and said that this short report has false information. But giving them the benefit of the doubt, if it's true, yes, it's a real problem. But it was a problem that was a good problem in the past, and I'm not concerned about it going forward. So there's this next one. Point 3 says that the company has shown little ability to innovate and lacks any meaningful merchandising competence, making its foray into grocery channel extremely unlikely to succeed. This guy doesn't know who Sam Galletti is. Sam Galletti has spent his whole life in this space with largely bootstrapping it and not taking too much outside funding. This company is vertically integrated. They manufacture 95% of their own products. They have no competence and innovation in merchandising? That's what they do. What? So yeah, this point gets a D. It's not an F because maybe the company stops innovating, but we've seen the data. They've shown us the data in their investor presentation, and the SEC regulates those presentations because that's material information that investors have to see and invest upon. We're making our decisions on that investor deck. So the investor deck has information that shows that this is a wrong point. This point is false. Let's look at it. The presentation on page 14 says that we have a proven track record for developing new products. Tattoo Chef is dedicated to the identification of consumer food trends, which helps the company rapidly introduce new and innovative products with a high probability of success. It's right there in the summary of this page. This track record of success has helped establish strong relationships with the company's current customers, attract new customers, and grow Tattoo Chef into a leading plant-based food company. So those are the words. Now for the numbers. The numbers say that new product performance by vintage month. Let's look at the cauliflower pizza. Release date, June 2017. And this is private label. The very first month of this cauliflower pizza, the company did $500,000 in sales. 6 months in, they did $4.1 million in sales. 12 months in, 1 year, they did $17.3 million in sales. And the company can't innovate? Now let's look at rice cauliflower. Italian International Tattoo Chef is the leading producer of rice cauliflower in Europe, according to the CEO, Sam Galletti. So the company knows how to make rice cauliflower. And this private label product was released in February 2018. The first month, they did $100,000 in sales. Okay, not as great as the cauliflower pizza, but 6 months in, they did $1.5 million in sales. And within 12 months, they did $4.7 million in sales for the rice cauliflower private label product. So those were private label products, but the short seller called out the company's branded products. So let's look at that. In May of 2019, the company released their acai bowl. In the first month, they did $200,000 in sales. In 6 months, they did $1.2 million in sales. And by 12 months, they were doing $9.3 million in sales for their acai bowls. From the first month through the 12th month of their acai bowls, their branded acai bowls, they multiplied their sales of that product by over 46 times. The company can't innovate? Okay, moving on. Next, rice cauliflower stir fry, which launched in July of 2019. The first month, they did another $200,000. 6 months in, they did $1.9 million. And through month 12, they did $6.6 million, 33 times their sales from the first month. The company can't innovate, they have no merchandising competence. It's very clear that this guy did not look at the investor presentation before writing this report. The company launches new products and gets them to millions of dollars in sales within a few months. So this point gets a F. It gets an F. It's just not true. It's an opinion, of course, but there's data that disproves it. We looked at it just now. So yeah, this one is it gets an F. It's not a good point. And that's one of his 4 points. So far he got a C, a B minus, an F, and now for point number 4. So point number 4 says that TTCF, the stock, trades at over 13x branded sales, a level that's much higher than typical plant-based CPG transactions, and is worth less than half the current stock price. Okay, so there's data for that one too. Let's look at the data in the investor presentation. We're looking at valuation benchmarking to comparable companies. And it says right here, 2021 projected revenue multiples are for Beyond Meat, 12.2x. For Fresh Pet, 10x. Those are pretty comparable companies. Beyond Meat may be a little bit more valuable based on how you want to value them, if they're a R&D tech company. But they're still a plant-based foods company, and so is Tattoo Chef. And they're both branded. And I'm not sure if Fresh Pet is a good comparison, but they're at 10x. If you want to say Tattoo Chef is expensive at 13x, hey, that's just opinion. The market is the market. The market will value companies based on what they believe. And the difference between 10x and 13x isn't really that much of a big difference. But say you say it is, then okay, don't buy it for 13x. Wait till it's 10x. Or wait till it's 12x like Beyond Meat. But none of this really matters because the company is just getting started. The branded products are just getting started. He cherry-picked the branded products. Note that he didn't say TTCF trades at 13x sales. He said TTCF trades at over 13x branded sales. So he doesn't have a problem with Tattoo Chef Inc.'s sales multiple. He has a problem with Tattoo Chef branded products sales multiple for their stock ticker. So he's saying Tattoo Chef, the company, has a fine valuation, but Tattoo Chef, the branded products, may be expensive. So the question I would ask them is, hey, are we investing in just Tattoo Chef, the branded products today? Or are we investing in the company as a whole and what the branded products can become in the future? And my answer will be the latter. I'm investing in the whole company today and what I believe the branded products can deliver in the future. The branded products just got started. The brand is 3 years old. Give the kids some time to grow. Tattoo Chef has a lot of potential to become a household name. All the company has to do is throw money and marketing and continue to innovate in their products. And they've proven that they can innovate new products and get them to high sales within a year. So if they can continue to release new trendy products for plant-based foods lovers, they will be more than fine. And then the second part of that is marketing. Can they make a good marketing strategy? Can they do influencers? Can they do social media? Can they do content marketing? Can they do radio and TV? Can they make all of that work? It's a matter of money and the right partner. So if you watched my interview with the CFO of Tattoo Chef Inc., Chuck Cargill, then you will see that Chuck has said that the company is going to throw millions of dollars at marketing in 2021 and moving forward. And their marketing plan is going to be comprehensive and they're going to release the plan in 2021. So if you haven't seen that interview, go watch it. It was a wonderful interview. We got so many answers from it from the CFO of Tattoo Chef. I'm grateful to the company for giving us that interview because it was incredibly insightful. And that tells us that this last point, it gets a B minus 2. It's a fine point. Sure, if you're investing in the branded products today, and that's all you care about today, what they're doing today, then sure, it may be expensive. I don't know. I haven't done the math in it, so I can't disprove what he's saying here because I don't care enough to. Because even this multiple isn't that much to me. And I'm investing for the future. What can they become? Investors invest for the future. They envision the future and they want to invest in companies that can build that future. That's what I'm investing in. So yeah, okay, 13x is expensive today. Fine. Okay, you get a B. You get a B minus on this point, short seller. Good point. Let's see what the company says about this. And I hope they do address this whole report soon enough. But I wouldn't care either way. I think the company has a good plan, as told by Chuck Cargill, the CFO. And I trust the company's management. Given Sam Galetti's experience in this industry, he knows what to do to get this company to the next stage. Sarah Galetti, she has built a brand that has gone public in 3 years. Who else does that? Sure, she had help from her dad and from Immaterial International, the parent company of Tattoo Chef, before they went public. And that's fine. Regardless, she came up with a brand and helped take it public by innovating great tasting, frozen plant-based foods that satisfies people who want to eat healthy but don't want to cook their own meals. So yeah, the company did some things in the past that might be questionable with their concentration of customers, but that's the past. We're in a whole new ball game now. The company has a bright future ahead, and I'm fine with that. So this report goes on to say some more stuff. So deep in this report, he keeps going on trying to take shots at Sarah Galetti. It's very childish. I don't know why he would do that. It's not really material. So it doesn't really matter. So this is Dox's points more. He got a C, a B minus, an F, and a B minus. So he's not doing too well, and he keeps digging himself in the grave. And then here, last thing I highlighted in this report was, in our view, it's highly unlikely that Sam ever imagined turning his daughter's consumer packaged foods project into a $500 million payoff. More likely is that he assigned some resources to the brand, helping to get into Sam's Club, where it unexpectedly took off. And he keeps going on. And my response to that is, so what? If I throw a couple $1 million at a project and it succeeds and does much better than I expected, is that a bad thing? If you're correct that he didn't mean to grow Tattoo Chef into the world it became today, then more power to the company. They threw money at some stuff and it worked out way better than 99% of companies that have ever been established. Most companies fail. Most startups fail. Most brands fail. And somehow this reporter said that it's bad that Sam Galetti threw some money at Sarah Galetti's projects, Tattoo Chef, and it took off by accident, and that's bad. So this guy just sneezes and makes a public company, and you call that bad? So yeah, this line gets an F. So now he's just digging, trying to put out more opinions out there that he thinks are going to scare investors. So as you read this report, you get to see how desperate this show reporter is. And yeah, it's just a desperate attempt to drive the stock price down. So remember, we came into this report with an open mind. We wanted to see what he had to say. But as we read on, we saw he had a couple of good points, and we have answers for those too. And then we saw that he had some silly points. And after that, he had some downright irrelevant points. So this report is insignificant. It doesn't really provide much material information to a competent investor, to someone who can think for themselves. So yeah, the report might scare off people who don't like to think for themselves or read beyond the headlines. So if you read the headline, you say, oh, cooling sales will likely leave investors burnt, and you just read that headline, then yeah, you might be scared and sell off your shares. But you have to do better than that as an investor. You have to read through these reports with an open mind and understand what they're saying, and then combine that with your information and the information you get from other sources, and then make up your own mind. So that's what I've done here. I've read through his report. I understand what he's saying. And I say to most of it, okay, so what? Most of that is in the past, and those were good problems to have. And the company has proven that they have a path forward to success. And now all they have to do is market and continue to produce more great tasting plant-based frozen foods. That's it. That's all they have to do. If they can do those two things, marketing and continue to innovate, because they have the rest of it. They have a vertically integrated supply chain. They have 95% of their products manufactured in-house, which most brands, most companies cannot say, and that is a great advantage. They have the partnerships, and now they have a path towards retail, which they haven't even ventured into yet. So I hope this has helped you understand this report if you've been having trouble understanding what's going on in this report. And I hope that this gives you some insight into the mind of short sellers. And if you haven't seen our video on that yet, go check that out, because it's important to understand the whole picture. Understand what drives people to do what they do. Why would someone publish this report about a company? Because they're betting against it. Because they want to see the stock price go down so that they can profit. It's that simple. And the information he shares in this report is at best insignificant and at worst false. It's just false. So there are things in here that a company calls false. I would love for them to elaborate on that. But even if they're true, I don't think they're a big deal going forward. So if you enjoyed this video and you want to see more like it, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on this short report on short sellers on Tattoo Chef Inc. and what you're going to do moving forward. And if you want to help the channel grow and reach more investors, join us over at patreon.bowlacademy.org. You'll get more access to me and get direct answers to your investing questions. And you will get to engage in our Discord channel where we share resources and discuss the stocks and SPACs that we're all investing in to help one another grow our wealth together. And you will have a chance at winning $200 every month just for being a loyal and engaged patron. So if you're interested in all of that, join us over at patreon.bowlacademy.org. And whatever you do, remember to always practice the bull mentality. The bull mentality is that we know what we invest in. We understand what we invest in. We believe in what we invest in. And we hold for the long term, because that's how we build wealth in this country. That's how we give ourselves the best chance at success on the stock market. So I plan to hold Tattoo Chef for the long term. I still have my 1,000 shares from June of 2020 before the SPAC merger, and I will continue to hold those shares going forward. I am not deterred. I remain convicted in this company. I am bullish and I have seen no reason not to be in this report. I'm Lincoln with bowlacademy.org. Thank you again and have a great day.